And we're live.
Good evening.
Hello, everybody, and welcome back to Crypto Talks, TA Monday thingy stuff that we do. And sorry we missed out on Saturday, but we had way too many things, uh, too many balls in the air, basically. And we thought, let's just take it easy, do our thing, and yeah. And frankly, we did actually do the earlier one last week as well. We did what was it, Wednesday, right?
Yeah.
So we thought, why not just leave it, let people do something else on their free time on a Saturday, you know? But yeah, but we're here now, so be calm, breathe, don't be sad. I'm sure not. I'm sure no one is sad, even though I said that, but we'll see. so, so actually today we actually something seems to maybe start happening.
Yay, something happened.
For example, there is talks about a diamond pattern forming on the 4 hourly. A very ugly diamond pattern, if you ask me. But
I find they're all ugly, and
yeah, they're ugly. There's nothing really, and I don't like to say, "Oh, this pattern, this is gonna happen." There's some merit to some of them, but I think both you and I, Rob, we would agree that diamond patterns are not really that much.
I would say I'd say that there are clearer things.
yeah, there are better things to look at. And Rob will show that later on too, because Rob is putting my brain and his brain in code, and we're gonna showcase sort of what that can do. Basically, we're building a strategy bot or whatever it's called. Well, indicator. Sorry.
We're building an indicator.
Yes. Yeah. We've been actually building several.
Yeah, I've been building several since 2018.
Since 1984.
Well, no, that was my like 2018 when in the last bear market was when I basically was like, okay, I haven't got a clue what I'm doing. Now I need to start learning. And it was the process of learning TA, of learning the knowledge of understanding how the charts work that led me to basically decide it's like, mentally, like in terms of my mentality, I'm not really the best suited for this, but what I can do is take my emotion out of it and put something that is like, this is what I would like to do. And you find it works, and it's not perfect, but then this is always the expectation that we find in is like, you change one thing to fix a problem and you create a new problem somewhere else. Unfortunately, there's no such thing as a perfect strategy. And
I would say, if I can remove emotions, because this past week has been kind of I don't really know why. I
dumb this last month. Last week.
This last week, for some reason, I was freaking out. I don't know what happened. Honestly, I'm really not that. Like, I used to be that guy that's very emotional with the trading and everything when I was like noob, right? But then
you're still
for some reason, for some reason this week, this last week, for some reason I was freaking out. I was like, oh, when do I do this? When do I do? Because I think it had to do with the sideways move, and that I finally had some funds that I could allocate. And I was like, the talk of the town was explosion upwards, right? Meanwhile, everything we stand for was saying correction, which is what we're going to talk about today. And it was messing with my head so bad for some reason. And I don't really know why. I did a few good trades, but then I messed up those profits by doing some bad trades. And I don't know why. I just didn't stay to them. Normally, when you scalp something, you want to do once on one coin, and then you're like, good, I'm out. Yeah. And then you do the next one, maybe, or none at all. But I was like, I'm gonna get back in here. I don't know what I was doing.
Well, yeah, it was revenge trading, and it
was ugly. It's not normally what I do.
It's that moment and that decision, that indecision on, is the price currently too expensive or too cheap? And you know that simultaneously it's both, and you don't, your brain doesn't know how to deal with it.
Yeah, that's one of the reasons to why we're doing these, or Rob is coding these strategies, and I'm just telling him what to put in there. I'm the helper, okay? I'm not taking much credit for it.
This was one way. So there was one way. Just a couple of years ago, it was 2020 actually, that I got around that was I sold my house, and then so that obviously gave me some money. Some of that was allocated. Okay, I'm going to buy some Bitcoin, and so what I did was I bought some, and then because I had a trading account, what I essentially decided to do was to use that trading account and trade. Really, I was trading quite aggressively, but with the a kind of backup plan that I was only trading a position size that was up to the cash I had ready to deploy. So it was like absolute worst case would be the trade would go bad and I'd convert my what was a leverage trading position into a spot position. And that was sort of so that allowed me to basically trade risk free, because it was like worst case I end up buying at a higher price than I could have done, but I still have the spot Bitcoin. That's fine. So that was kind of just a little way I got around that. Not that I recommend leverage trading. It's a stupid thing for stupid people to do. But I'm a stupid person. So
leverage for me means greed, and greed is dangerous in my opinion.
Leverage. So leverage is a tool. It is purely a tool, and like a tool, if you misuse it, then it goes wrong on you. Being able to have offering up to 100 times leverage to idiots or anyone, people with no experience, is straight up like malpractice. But they do it because they can, or the reason they can't do it anymore in several countries is because they tried, and so it's I would stick generally. I was like 1, 2, 3 times leverage, maybe, if I was like very, there'd have to be a reason for me to take a position of up to 3 times leverage. And it would have an invalidation. It would have a stop loss. It would have a nope, you cannot get stuck in this hole, because. And I have been caught out
big bad
stuck in that hole before, and it was big bad.
Oh, have we all?
Oh yeah.
Okay, so I just want to say hi to everybody in the chat. I see Jay's here, Silvio's here, Imre's here. Imre says it's Monday, almost weekend again. oh, super funny. But yeah, you're right. It's almost weekend again, depending on how you look at it, I guess. Maybe Imre's weekends, he's off work Tuesday, Wednesday. Who knows? Right. Thomas is here too. Welcome, Thomas. Good
that's my guy. That's my guy. I play.
Oh, it's your guy. You have a guy?
Cool. I have a guy. Tom is my everything guy.
Kind of like you're my everything guy.
Tom's my gym buddy. So.
You guys are doing some good work.
You can thank him for this chiseled physique.
Yeah, you guys are doing really well. I'm super impressed, actually. It's quick results. You're doing good. I'm proud of you. Anyway, let's get on to the TA now before everybody falls asleep about us talking about random stuff for too long, as we do. Let's see. I'm going to share my screen here. So what I want to do right now, actually, is I just want to kind of go back to what we talked about last time. And I might actually just zoom in a little bit more here just for visibility. So we were talking about how we would, when we cracked through, we were here last time, I believe, and we were kind of talking about rejection of this resistance, which lines up with this stuff right here back in, when was it? May last year. So it's almost a year ago. Yeah. And we're back in the same price.
That level does also have quite a lot of touches and wicks down from from 2021, which that to me that
it does.
That was the level that I've had drawn on my chart for a while as the upside target, and you mentioned sort of 29k, and here we are. It's as it stands, it is getting rejection on the first major resistance it's come to, and
which I mean, after a run like this, 2 big pumps up with a huge dump there with when the banks started going to crap, we did talk about how we would see some kind of rejection here, and then we would have an area here, kind of where this is, where all these wicks are kind of formed and these bottoms closes and everything, and we got this here as well. And we were expecting this, and for me, I was hoping to see some kind of like much faster rejection. So I was hoping to see some kind of like hard dump down, right, before the Bollinger Band middle line could creep up too high, and right now the Bollinger Bands are actually lining up with the a massive support line right here, which is the previous resistance that was extremely long. So there's probably a lot of support right here, I would assume. No promises, of course. You can never promise anything in this game. I mean, look.
Well, what we have seen though from not being able to promise it though but we've seen some very reliable behavior. We've seen support and resistance being respected very well, and this quite clearly right now is a trader's market. This isn't going to just moon anywhere. It's horrible. It's choppy and just nasty price action really that suits people who can identify, as we've talked about, identify ranges early and go, okay, I'm going to take some off the table, and then this is where I'm going to get back in and just sit and trade that range. Can work very successfully.
Yeah, I mean, if you're a very experienced trader, a trader's market is your dream scenario, basically, to a degree. But so what I want to do here is I kind of want to just reiterate or go back to some of the old resistances and supports that will now act as support. Just because if we get a correction here, that is, we're starting to see a little bit of a red candle here. It's about the same as the other ones in terms of, but the volume is gone. The volume is gone.
And that to me, generally, that will always, not always, but typically indicate it's further downsides coming. You end up getting that inevitable hunt, that drop for okay, where are the buyers? You have to, the price has to drop to where the buyers are. So
precisely.
That lack of volume is very much making me think it's going to break down.
So the reason to why I want to go back is just that, right? We want to identify where there might be buyers. That's the whole point of the support lines, right? So what I'm going to do, and I'm actually going to be very open about this, I have placed limit orders at some of these levels, or most of these levels, or actually all of these levels now that I think about it. All these ones that we feel are significant. I did this last night, and because I was starting to feel that things will probably turn over now soon, and maybe this week will be a big week. It's weird. It's funny to say that you hope prices are going down. We've been saying that for a while though, because we want to get in with more, right? I think everybody who has been in this, survived this downturn the past year and a half, all want to see lower prices again, because
I want this for the next 2 years. It's like, I don't want the price to go anywhere until 2026. Just relax, please, price.
Yes, please stay away from this. Like, if you can stay under this fib level, I would be happy. But obviously, we cracked it now, so too late, right? But okay, so let's head back for a little bit for the first one. So the first one is going to be this fib level right here, 25.3 or 25.2 ish. And this is the fib level that you guys remember us pulling from the weekly close at the COVID during the COVID crash, and the all-time high weekly close, and that's been playing out, as you can see here, basically playing this range forever. We did go over previously that this was an anomaly, and we could move the price up and just move this range up to here, and it would look the same. We would sit in between this range right here. So that range is still for us the bottom range. This is the anomaly, but the first resistance or support, actually, I'm so used to saying resistance now, it's crazy, is going to be this orange fib level, which is the 0.382. So the first time we're going to see something as a horizontal price range where we're going to see some support is probably going to be right here, because of the significance here, and it's probably going to be pretty heavily defended as well. So I think that's where most of the largest buyers will probably sit.
Yeah. So say that as I mentioned, say that's where the volume is. That's where the price will have to come down to in order to find those buyers. So.
Yeah, and from here, if we look at what the price is right now down to that, it's only 7.1%. If it's from this daily candle opening down to there, it's going to be basically exactly 10%, which is obviously not unheard of for Bitcoin. That is not even a rarity at this point. It just never been. But so here's the first one, and that one is going to have extra strength now that the daily Bollinger Band middle line is actually on it, or slightly above it even. I'm not saying the Bollinger Band is super significant here, but an extra support line that lines up with another one, the confluence,
Helps.
extra. It helps.
It helps.
I wish it didn't help because, as I said, I wanted to go down further. We do
Well,
have these trend lines too, though. Let me just see these. These are trend lines too that are we need to get through these first. This one is just the old one that's been anchored over here, and it's gone through all these supports here and here, and we kind of need to see that being cracked. So we're back in this. That's why these lines here are still valid for us, because we feel like that channel is important still. If it's cracked. This one I just pulled today just for the sake of pulling it from here to this exactly here, and then it anchored. Actually, I'll zoom in a little bit. You see how it's bounced on that once already from here to here, and obviously anchored back there.
Well, then now it's cracked through.
And now it's cracked through, but it hasn't closed under it yet. So, which it's maybe not super significant, but this has been weakened now.
Yeah.
And we've seen that it's not an instant. If you zoom into the hourly, you don't see a bounce on the hourly on this. I don't think, actually. Let me
No, I'm on the hourly now. There's not really any. So, clearly the level is holding as it stands. It is support. So now it needs to start putting an uptrend in again from there.
Yeah.
My sort of expectation is that it does roll over and come down at least a bit more. And ultimately, I do expect it to kind of touch that bottom yellow line you have drawn.
Yeah, this one.
So at 20.
No, you mean this?
The bottom one at some point.
The bottom one. Yeah.
Yeah, it's like I don't really see a reason why it's not going to. And like from here, we are now range bound in what is a pretty narrow range from
it's only
20, 26,500 to 29,000 is only a 10% range. And so
and as you can see, it's an ascending triangle as well. Is formed by this, but it's a very weird one, but it's still there. Not that I think it has any significance.
We'll have to see, because if it fills it out and starts using that level as a support line again and holding it, then it's looking likely it's going to break up. But now, say this is one of those occasions where you have a very easy you have a very easy trade setup where if it does break down significantly and we do see that volume really come in, we'd have to see. You want to see a breakdown, but then you always would want to trade. If you were going to trade short, you'd want to trade the retest, because what we could see is a breakdown into that volume. The buyers have found the sellers there's not enough sellers, and it just wicks down and then cannons up, and that happens so often on Bitcoin, where it will just stop everybody out, wipe all those people that had their positions set perfectly, and then up it moves. So
go on, sorry.
Yeah, so it's an awkward. It can be an awkward thing to trade, but if you stick to the discipline of wait for the breakout and then trade the retest, then you'll buy the retest. That is what's more often than not something that's going to work out. And then you've got an easy clearing validation of a stop loss, because that's at the bottom of the range.
Yep. Well, okay. So what I was gonna say here with the volume as well, like if we see everything coming down to this fib level, and you still see almost no volume, it's not gonna hold. Like when you come down and you hold a level going sideways, like we are right here, we're holding it, we're going sideways basically, with basically no volume. That means that there's basically nothing. Nobody wanting to buy, and nobody wanting to buy, and nobody kind of wanting to sell because they're unsure, right? Yeah. And if we get the same behavior of the volume down here if we reach this level, then it's also like there's no support down there to actually hold that up. So then,
and that's why we get consolidation patterns and sideways ranges. That's this is the exact mechanism that leads to everybody wanting to buy wants to buy lower. Everybody wanting to sell wants to sell higher. Nobody really wants to play in this range except for traders who all have the same lines that we've got. These lines aren't anything special or unique.
No.
80-90% of decent traders would have these lines on their charts, or these ranges in one way or another. And so they all end up having the exact same orders, the same places, and we just bounce between the two levels until something breaks one way or another.
Yep. So I'll say this: I have placed a buy order here just for the sake of getting some at that range if it bounces from there, which is just the way I do things. I like the idea of being able to support that level. And hi, Marcy, welcome back. And the next level for me, there's a pretty big jump from here to the next one, which is this green line right here. And the reason why we have this is the old support line, the top before the FTX crash. Then we had some resistance there. We cracked through it, came down, retested it, which is where, we would expect it to, and it held. Came up, and we had this big crash thing, and we bounced on this line here that we made. We bounced here for probably because this lines up with the 20K, but we bounced it, we came back up, and this line is now significant. We have this topping, this top here, resistance, support, and then it failed and a huge crash, but that made sense because no resistance line is powerful enough to hold back a bank run, basically.
No.
So the next level for me is all the way from 25.2 down to 21.5. Actually, it's a big jump, but if we go through if we get back into this range again, like we're gonna see the bottom of this range. Maybe not the bottom, but we're gonna get deep into this range.
The middle of the range, yeah.
Yeah, this is like 45% within the range, like from and the range is again this green fib level and this orange fib level. So that's why we have that line there.
Yeah, so we have seen it. We have seen these patterns just continue. So it's not this really is a neutral zone. This is absolutely now a no trade zone. You don't want to trade.
It's dead here.
Yeah, you don't want to sell unless it breaks down. You don't want to buy unless it breaks up, and that's that's just how it goes.
At this point, you have to wait for confirmation of a new trend happening. Like if it breaks this trend, this resistance line, it's not an exact line either, but if it starts pumping somewhere around 29 and it starts going, then maybe you should get in because, and then if you're early on the trend. If you're not early, then be careful, right? Not financial advice, but so what I was trying to say here is I've doubled my buy order here from here. So I buy whatever I buy here, and then I've doubled it here. And this is because I like to layer in, because if you have a bunch of layers going down and you start buying, let's say you buy with $1,000 at level 1, 1,000 at level 2, 1,000 at level 4, and then you have, let's say, 5 layers or 4 layers or whatever. If you buy with the same amount all the way down, your cost basis is going to crawl into the middle of that range, right? But if you double your what you're buying on the way down, your cost basis is going to fall significantly faster, right? It's more risk in that in terms of accumulating, but you will get much more, obviously, for the same amount of money. So that's what I'm doing here. I have 4 layers, and where's the camera? Here it is. I got 4 layers, and they're all doublings. Well, not doublings, but almost. They're larger.
And in that same sense, what you can do then is if the price breaks up, you don't completely negate your setup because you've now got 4 levels, and if all 4 levels make sense, all you would do during a breakup would be to remove the bottom layer and replace it up near the top, and then you don't chase. You kind of chase the market, but you chase the market with patience. And you say, when the dip comes, wherever the dip is, I'm going to buy it then.
Yeah,
and
exactly.
Although if for whatever reason we went into a full blown parabolic run to 100K, it's not the best. It's not the best option, because the best option is to smash market buy. But the best option to do that was 3 months ago.
Yeah.
Now we're here, nearly 100% up from the bottom, and it's that we've got to kind of remember the percentage gains of Bitcoin are not going to be what they used to be. In mid 2019, we had I think a 340-ish% rally. So say if we kind of assume that mid-cycle rally is going to calm down, maybe there's another 50%, 60, 80% left to go, and okay, that's cool. But there is also a significant downside risk if the global financial markets turn and really start to go down. Then I'd hope that Bitcoin sort of relatively outperforms given its relative underperformance last year, but
Yep.
we'd have to see that, and we'd have to see that strengthening behavior to give us that confidence.
Mm.
Either way, it's not a recipe for 100k Bitcoin.
Yep.
So.
Yep. No. So next level for me is actually just the 20k, simply like as simple as it gets. 20k is a psychological level for a lot of people, but it also meets up with this bottom range here, and we've already bounced on it, basically on it. We closed above it, but we wicked up below it, and that sort of lines up with this trend line as well. This trend line is actually not exactly how I want it. There we go. But it's not going to dip and go backwards. It's going to have to crack this line first. But I have a buy order here as well, and then the last buy order. This one's so simple, but the last buy order is obviously the bottom of this range at 18.8 or 18.7, I think it is. Yeah, 18.7, and that's where I put my levels. And I've layered in. Let's say I buy 1 Bitcoin here, I buy 2 Bitcoin here, 3 here, and 4 here. That's 10, right? I'm not buying that much. Don't worry. I'm not that. I'm not that guy.
I'm buying 10 Bitcoin. Ooh.
I'm buying 2,000 here, 4,000. No, I'm kidding. But so the levels are pretty simple. They're all supported by this old range. The top of the range is the first one. The bottom of the range is the other one. And then we got 2 in betweeners here. And then what I've also done is I've actually started a reversed grid bot on Pionex, just for the sake of filling in kind of the blank spaces in here. And what that bot does is, let's see if I can actually show this. All right, here we go. I'm actually just going to show this so that people can see what it looks like. Ooh, it's very simple. The bot just puts in simple limit buy and sell orders for you automatically. I don't know if you can see through all these lines, but so essentially I started it up here and it's been trading down. So what it does is on its way down, it's buying smaller increments of Bitcoin with dollars. And then if it goes up, it sells it off again with a profit because it buys between 2 different lines, right? So it makes a small profit in between. But over a long time, depending obviously how much money you put into it, it will actually if you do this thing here, it's going to buy and sell a lot of times, and it's going to make, let's say you put $2,500 into it or something like that. It with 100 grids and this setup, you would probably get like maybe 50 cents every trade. But if it does 30 trades a day, it racks up for a couple of months.
Yeah.
It's fine. And for me, mostly for me, it's just I want to fill in the blanks in between all the all the buy orders and everything. So if you want to try out those bots, we do have a link in the description as well. We use this, well, at least I use this a lot. I know Rob uses Rebalancer bot or something.
I've used rebalancers. Yeah, it's for me. Yeah, say the grid bots are very good in terms of for to take away sort of stress-free trading.
Yeah,
it's
like automatic scalping, sort of.
Yeah, so I see it very much as it's not buying Bitcoin. It's just it's just $1. It's $1 pot. It's a pot of dollars which you are using, and you're just using Bitcoin as the medium to try and increase that $1 pot over time. Yeah. And if the price collapses to the bottom of the range, you end up fully saturated in Bitcoin. If you are
nice,
which is nice. If somebody, if you think about having, the range, some of the old ranges that Phil that you put up on, if you'd have maybe stuck to what you said you'd do and just set a bot and leave it alone instead of stopping it after 3 days every single time, then that for that range, if you can identify it and look at it and go, I don't think that the pattern's going to break up for a while, therefore I'm going to allocate these dollars to this stack, then either you end up with more Bitcoin than you have before, or you kick out some dollars. And both of those things are nice.
It's like it's sort of like staking stable coins almost, because what it does is it spits out these releasable profits that you can release every day. Maybe it's just a couple of dollars a day, but like if you're saving that in that pot and you get that huge dump, like if this bot runs now until we reach like some sort of real bottom, maybe it's accumulated a couple $100 or something. Once you reach that bottom and you stop the bot, you can just use those dollars and just buy that bottom with, right? That's what I like about it too. It's very simple. Like it's not the best way to do things. That's what Rob has created. That's what the best thing is. It's a strategy that is an indicator for now, but later it might be a bot somewhere that we might talk about later. But so Rob, I'm done with my TA thing. I feel like what we're expecting is downtrend. I think that was pretty obvious. We never said it out loud, but it would be helpful with a correction at this point.
Well, did they say I'm expecting range until not range? So
yeah,
up, down, up, down, or sideways, yay. But yeah, that is one thing. You've got it there. That weekly candle is not a nice candle. That is no, the doji at the top.
Oh yeah, that one. Yeah,
that is a absolutely clear reversal candle at the top of a big, massive Hulk penis. So, like, it's. It is.
You need to put that on a shirt, bro.
Hulk penis.
Yeah. And again, Bollinger Bands, I like them because they work. And this weekly Bollinger Band line now is lining up with this this trend line.
I just expect another crack of that support level at some point.
Yeah.
And when and where and how it comes, it might take 3-4 weeks until it ultimately breaks down. It could get really boring here. It could come up and then come all the way back down to that trend line. It's right now is no trade zone. It's potentially topping out. This is a good place objectively, purely from a technical perspective. If you bought down at 15,000, or if you bought some altcoins that are 200-300% up, if you bought the right alts during the bottom, it ain't a bad time just to lock something in.
Although keep in mind, capital gains taxes in different countries, you will have to look it up yourself in your country what that means, because you will incur in most countries capital gains taxes if you sell up here. Just FYI for those who are a little bit newer to this. But I feel like that's an important part because you really don't want to mess your taxes up.
Coin margin leverage shorts. There you want. That's how you get.
All right.
That's Rob, how you sell without selling.
Yeah. Rob, would you like to show off the stuff?
Oh, I'll show off what we made. We made.
Let me know when you're ready with it.
It's cool. Yeah.
Can't really see the screen on there.
You can't see the screen? I'm sharing it.
Yeah, I see that. I just can't see if you're on it. There we go. Now I'm sharing it.
Yes. So if I just put it on, right? So, what indicators did we use? Should we just get that up first? So we've got the Bollinger Bands, haven't we?
Yes.
And do you use the MACD?
Don't they show up? No, they don't actually.
The Gaussian shows up.
Yeah, we used a lot of. So maybe just explain how this works, I suppose.
Let me remember. So basically, we use the MACD, we use the Bollinger Bands, we use the RSI. That's it. We have we also use the RSI of the Bollinger Bands, which is something.
Oh right, yes.
So
it's a bit tricky.
That's something I like to use, where basically like. The good thing about the Bollinger Bands is that they do sort of act for about these sort of ranges when we are outside sort of normal price action behavior. But what you can also see is how you, in looking at the Bollinger Bands, you can also see how extreme the move is, and if the Bollinger Bands are changing sort of very rapidly and they're moving apart, you'd want to maybe account for that. So as an example, when we have sort of this, let's put all my lines back. When we have this big drop here, you can come outside the Bollinger Bands and then you can ride it down quite a long way. Now, but because of that, and you've got these big, this big expansion of the Bollinger Bands, that is kind of just calm it down, because this volatile move isn't over yet. But what we do overall with this, it's quite cool, is we purposefully look for these volatile moves. So we look for these big moves down and outside the Bollinger Bands, and then really like oversold conditions on the RSI, oversold conditions on the MACD starting to converge, and it does. Oh, that's messed that up. What it does do is very, very nicely find some local bottoms and local tops, and this is kind of a good example. Go away. This is a good example of a strategy which looks to say buy bottoms and tops, but it's not going to be perfect every time. And in perfect example of saying what happens when, hang on, let me just remove these drawings.
Yeah, at least like you say, it's not perfect all the time, but
no. And here's a perfect example of a time it's not perfect, even though it's good, because if we look, it kind of catches catches the pretty much the top there. It's just it carried on uptrending, caught the top, but then it carried on uptrending, and this is sort of one problem, a perfect problem with doing what this strategy kind of does, which is try to catch a falling knife in both directions. It can work very, very, very well as a tool for saying, okay, these conditions are extreme and chances are it's going to reverse, but there's never any real guarantee. And so me and Phil have had loads of conversations, haven't we, about fixing this?
Oh yeah,
fixing this section.
We think we have a solution for the exponential move to not sell early enough, to not sell too early. Sorry, rather. And the solution was, I think, to move to the weekly on it and wait for the weekly to confirm that it's time to start selling on the daily chart. So that's where we have that, which means that everything after that, until the next big drop and next buy order, is just where the daily is allowed to sell.
Yeah. So what it would do then is, it would cut out these sells. Pretty much is the kind of plan. So it would wait for the weekly, and then it would then have the big sells. But in terms of this is a kind of good. It's a good example overall of the patience of buying, and how if you are patient, then this strategy just uses say standard indicators. It doesn't use anything remarkably special. It doesn't use anything really unique. All it's doing is looking for conditions that's confluence of oversold conditions. And if you spent 2021 and you bought there, so what? Look where the buys are.
Turn off the Bollinger. I think it might be easier to see because it's kind of clouding those arrows, I think.
Yeah, there you go.
Yeah, there we go. That's easier.
So what you'd end up having, not catching necessarily the exact bottom, but in terms of, as we talked about here, where you've layering in orders, you can layer in over price, but also you can layer in over time, and you can say with full understanding, I'm going to wait for a clear buying opportunity, rather than waiting for what you don't, waiting during an uncertain period. Because if you wait during an uncertain period, more often than not, or not necessarily more often than not, but quite a few times, you'll find it just rolls over, reverses, and you lose out, or you could have got a better deal, and it's your impatience that ends up costing you.
Yep.
And if you'd have just applied sort of this buying logic, say that into.
Oh no, it's lagging.
But it caught everyone, because you can't do. So you can't catch every bottom, because it's going to buy within the range it is. It's something can be oversold at 30k and then later on be oversold at 15k. But if you'd have spent the year being patient, waiting for buying opportunities, your cost basis at this point would be
very good.
Not bad at all.
So
because
can we just zoom in at the end there? What we've been zoomed in on my charts, just to see kind of what it's done currently during this time period that we've been in, just to see how it's been doing there.
So yeah, so it was a little bit early on the FTX
on the
crash.
big drop. Yeah.
But though say that was an extreme move in of itself, and this is a perfect example of we're going to buy in multiple layers. You don't have to go all in all at once. Going in all in May with 34,000 would have been, that wouldn't have been very good at all, because what you're talking a month later, we're down at 17. But if you'd have bought some at 34 and then a bit more at 26 and then a bit more at 20, between those three orders you would now be about break even. Add in the absolute nailing of the bottom and the nailing of the pullback we had a couple of weeks ago. Yeah, you would now be sat in profit around this period, even if you would have sold too early here. The sells are, we're debating when we would use the sells or not. I would.
There's some tweaking still.
Yeah, well, but then you can apply your own logic. I would look at that having fired and gone, I'm not going to buy that yet, or I'll start placing limit sell orders, but I'm willing to kind of remove them if it breaks up, or I would remove. You can zoom in from. So if you look, it's from, say, this date. You can use this same sort of logic. You look at the same strategies. It won't always catch it, but it caught at the end of the big moves. It caught some. It's telling you things are a little bit overcooked on the 4 hour. Would I buy the 4 hour constantly? Yeah, maybe not, because it's too short term. But
I think this one is used. It's designed to work on the daily mostly, or be viewed on the daily. And I think it's more of an accumulator. The sell orders are sometimes nailed perfectly, like this one right here in the middle of your screen there, the top after the first drop. Nailing that. And if you've layered in, like I'm doing right now, with buying double on the way down until it starts bouncing, if you've done that, then you're definitely in profit there. So this strategy is basically designed around like what my long-term thesis is of accumulating and then waiting for a peak. As you can see, it's kind of nailed it fairly good. And again, like Rob says, like this is not a perfect thing. It will never be. Nothing can ever be perfect in trading. It's not possible. But nailing these bottoms and using the layering in technique that we talked about earlier is going to be very useful. And our idea here is to get this strategy. We're going to open up our Patreon eventually, and we're going to make these things available for Patreon members, so that you can use these and access these and just have them on TradingView, use as alerts. And then we have a future partner that we're not going to talk about yet, but we will definitely bring them on here to talk about how we can make this into a kind of an automated bot as well, if you want to use it that way, through that platform. So if you're interested in this, we haven't opened the Patreon yet because we feel like we shouldn't yet. But it will come eventually, and we're still tweaking this. I think Rob has a few other strategies and indicators that he's made, right? You made one very recently. Yeah, will all be available for everybody who's a member.
I can get the one that I made easily.
You can show that too.
Absolutely loads of them. So this one is very, very much in development. Where is it? Difficult.
Oh, it's somewhere.
Hang on my scripts. There you go. I've not saved it. Bullishness index. There we go. So this one's cool. Very much still in development, but it's basically, so it's an index of all of the indicators, or a big large range of indicators in the market. So we use if I just get it up. So I use moving average. I use 4 moving averages. So it's like how many moving averages are above each other. and that gives up a score. The RSI gives up a score, whether or not how strong it is, but then also if it's oversold, that will reduce the score. Look at the MACD, look at the Bollinger Bands. I plot fib levels based off the last sort of 100 candles, so it will just say it will plot the retracement based on the lowest and highest price in the last in a range. It's not a perfect fib level, but it does work. The stochastic RSI, the ADXDI, and the parabolic stop and reverse. That's just what's used at the moment because I threw some indicators in, and yet to potentially, it may end up getting fixed in the future. But what it does do is it gives an idea of it aggregates all of these indicators and says, what are they all saying? Are they all bullish? Are they all bearish? Is there a mix in between? And so it can kind of give an idea of where the trend is going. And a good example of that being here. So if you look, so November 2020 running into this, into the dump of May 2021. Now, this was declining for months and months and months. From it peaked in November when the price was still 16k or no 19k. That was just before the break of the all-time high. So here, to me, this is a perfect example of bearish divergence aggregated across all of these indicators, across 7 or 8 indicators, saying no, the momentum is cooling down. This is not, this rally here is overcooked. Even at 20k, it was overcooked. Things can stay overcooked, and this is the problem with having these indicators that try and sell tops. And it's a problem with selling tops in anyway, and the problem that we all have when it comes to selling Bitcoin. When's the right price to sell? When are we being greedy enough, and when are we being too greedy? And so this, just as this is 89 on this indicator, it maxes out at 100. So that is like every single indicator at that point in time was screaming, this is stupidly bullish. And then the price followed, but the indicators were going, hang on a minute, no, the momentum's not there anymore. And it has worked sort of in reverse at the bottom, where again, it's not going to catch the bottom. If you take another leg down, then you take another leg down. But in the moment, very good at, I just put 30 on the level to say an oversold, just because what's what we use for the RSI. But you could use that as another way. I didn't quite hit it at that bottom, but
it's still the range is still good there on that one.
But that's either you can look at it as the entire range really and say we are over bearish in this sort of zone, in the same way that you can go throughout this whole zone. You're over bullish. Even here, these relative tops were it's the momentum, the sentiment was kind of in a range here. That's kind of one way to look at it, is sentiments in a range. And this has worked. This worked for that bottom. The COVID crash, the indicators didn't even have time to reset,
to react.
Because this does use this does use a moving average as well of this index. So it's like I could, hang on, no, wrong button. So if I took off the smoothing value to say 21, you see it gets a lot more janky. But that's in itself, that can be, it nailed that top based on, based on that one. And again, you can see this, so you're using it on different time frames. I've got to sort of play around with it, but for sure,
maybe this is a good way to layer out. Like you can use this maybe to layer out method, because those two tops that you showed there towards the all-time high there, it's literally. It's like it goes up and then it falls down like hard. If you get that trend reversal of that indicator, perhaps that's a way for you to say, okay, maybe this is a short-term top, and I want to sell off 10% of my holdings or something. That's and absolutely, why not, right?
And if you sell 10% of your holdings and then the rally continues, it's a really good job that you still have 90% of your holdings.
Precisely. we like the layering stuff. It's fun.
And so as a as a tool, this is something which we are in development. Well, I'm in development with, and I guess you could even smooth it out really long term. I mean, yeah, that's. Do you think we were a little bit over bullish there? So that's just using a 200-day smoothing value. So for the average of these indicators over 200 days was overbought. For all of this period of time, and look where it reversed, where it rolled over. Was
it's fun to see as well. I mean, this is where we said this is where the top was, and the other, like, technically the next top was actually the technical top, but it's like the real top. And now we've also said, with the range that we have in the current, like, past year, it's like the fib levels are the actual bottom, but there was an anomaly that gave us an even deeper bottom, right? So it's the same thing with those two tops, and I think this indicator kind of shows that pretty good. Like, I'm pointing at the screen for some reason, I don't know, but like you can see that topping. It's like a mountain, and then it's just like no. So that I like that. That's pretty good.
And so here, as a pure sentiment, you can see we're starting to now curve back up.
Yeah.
And so potentially sustainably, if this is sustainable, then I need to have a play about the time frames on this, because it really does show different long, mid, and short term behavior. The 100 days nice.
Yeah, I mean, if you're like me, I'm more a long term person, right? I try to accumulate. This is why the strategy that we used, where we used my way of trading it, the first one we talked about, that's why it's pretty good at catching good bottoms, because of accumulation. Because that's just the way that I think, and that's the way we made it, and it obviously works pretty well. And then if I combo that with this one, and would just wait for like an oversold on like the 100-day that you showed just now, that would line up with two of the sells, I think, two of the buys, I think, right there.
So here, drawings. So
cool.
if it only sold, say, in that window, that would be.
Oh, I was talking more about the tops, the bottoms, actually. So if you see the ultimate bottom, kind of lines up with that dip down, the last one right there, basically confirming that buy order was pretty good. So
So
a few days late, but
I think even so, you can, straight just looking at the 50 line. And you look at that sort of center, then this is neutral momentum. So where did the market, where did everything fall from? Super bullish momentum cooled off. We had basically a year of neutral momentum from about here to about here, and here's where the bear market started. A proper, the bear market really took off in because 43k. It's 30% down, but that's just Bitcoin thing. So that was
And I remember that being a higher low as well from the previous dump, right? And a high with a higher high as well. Yeah,
it's like, I mean, come on. Let's not get too carried away, guys. Not yet. We've seen it all before, but I don't know. I'm not sure that we'll go lower unless something. If the global economy collapses, then maybe you'll get a chance. But good luck buying Bitcoin when the bank has no money.
That's true.
And that's that's genuinely kind of a thing. Is that the times when during huge drops when I've tried to buy Bitcoin, that is always when it fails. So just a piece of advice: if you are looking to buy, this is advice I can give: is if you are looking to buy and you have money ready to deploy, have it ready, have it in, and how much
I can attest to that.
How much you want to trust exchanges, okay, fair enough. But regardless, if you want to buy, you've not really got much choice. You need somewhere to buy it, and that you need to have that money ready to go, because trust
otherwise
me, your transaction will fail if you try and buy when the market's 30% down and everything's collapsing and on fire.
And I can attest to that. I'm going to jump over to my screen real quick and finish with this. For those of you who were there, when this dip happened, I
was
had
there.
my funds in the bank right here on that day here. Right? No, actually, not even that. On Wednesday, I had it ready, and I had to move it to Kraken, right? And I tried moving it. It didn't go through because they did not, for some reason. I moved it on Thursday when it was dipping, this big red candle, and it didn't work because they apparently, I didn't know that, my bank didn't know that either, that Kraken does not accept express stuff. So I wanted it to arrive on Friday because my plan was to buy at 20k, exactly on 20k, and I was ready to do it with the funds that I had accumulated over time, right? And didn't come through until this candle right here, Tuesday, this top, literally. That's when I got the funds. So if you have funds and you're looking to buy within the next week or 2 weeks, maybe start moving things over already. But that's not financial advice. This is just, if you're
Just
planning
common sense
on
of-
making a
yeah.
move, make sure you do it, because I missed out on that and I am still beating myself up for that. And it wasn't my fault at all.
And as well, if you have the money on the exchange, you can set limit orders. So you can have
Precisely.
orders that will fill when you are asleep. So
Yeah.
definitely be ready.
Precisely. And we're going to round it off here, guys. We've been on for an hour. We usually do this for 30
Yeah.
minutes, but for some reason, I think we just felt like talking today. No, but we had some pretty good TA here. I feel like we had a lot to go through with all these levels. If we're going to see this dip, I think we went over it all, and I think they're pretty solid. The strategies that Rob have coded up for us, we wanted to go over those because, like I said, we're going to put them on for Patreon members. And by the way, the Patreon membership is going to be, like, I think the first level is at $10 a month. Like, we don't want to. We've seen other creators, and I'm not gonna try to toss other creators onto the bus, but I've seen people that sell like courses for like $3,000,
$1 million.
$1 million. But so, and we don't want to do that. We feel like education is what you get. Like education and entertainment, you're gonna get for free from us because we like doing this. Obviously, we're sitting here talking to you because it's fun, right? And we don't want to. But when we put in a lot of effort into creating strategies and coding things, like, it would be nice if we could actually live off of this eventually, right?
Well,
but we're not gonna.
We can code more. We can make more. That's the
so
the end
so
game,
generally
right?
speaking, what we did was we want to try to make things as available as possible, and we've seen many others that have these tiers, and they usually start at 25, and then the second tier is like 50. And so what we are going to do is we're going to have the Patreon tiers be 10, 25, and then there's going to be a special one at 50, and then it's just going to be like, if you want to do a lot of cool stuff that you don't really need at all, it's just fun, then it's going to be like $100. And then that's like, you don't even need what's on there. That's just for fun, right? If you want to support and stuff like that.
You really like us.
Yeah, literally, that's it.
Yeah.
Like, it's going to be different access levels on the Discord, and you're going to be able to hang out with us all the time in specific channels, and there's going to be access to long form stuff with us here on the channel as well. So we're prepping all that. We just don't want to open it yet because we feel we're not going to be able to. Yeah.
One thing I would like to say as well. If you have an idea for a strategy, if you want to come and talk strategies, I will happily sort of help you to make a strategy. If I've got time, I will sit down with you. We can go through what you're thinking, how you like to trade, code it up if you want, get some indicators out of it. We can play around with all of that kind of stuff. Come in the Discord, have a chat. Always happy to help. And if we can make a nice profitable strategy between the two of us or between the collective, then cool. So sharing is caring. Let's come learn some stuff.
Precisely. Let's help each other out. That's why we're here. Like, we're not here to take money off people or anything. We just want to hang out. Literally, I'm not even kidding.
I'm here to take money off people.
I thought that's what
a trading is, right?
Yeah, but like, I mean, it's fair game.
It's fair game.
No, but seriously, like, people, please come on, hang out in the Discord. Let's talk. Let's make some strategies together. Let's discuss some cool stuff. Like, I'm more than happy to sit down and do if you're very new to TA, and I think a lot of the people in the chat right now can attest to this, that I am more than happy to sit down with you for an hour and teach you some basics PA so that you can learn to be doing this stuff. Just because I like to do that. That's what I like. So join us in the Discord. So we're gonna end it here, coming up to 1 hour and 10 seconds. So remember to subscribe, like, share it with everybody you ever known, and don't say it, Rob, not this time. But yes, please do that. So we'll see you next time. Bye.